What happens to taxes during a 457(b) Gold IRA transfer? Taxes can get confusing when you move retirement money, especially when gold is involved. What happens to taxes during a 457(b) Gold IRA transfer depends almost entirely on how the transfer is done. The good news is that when handled correctly, most investors can move funds without paying taxes up front. Knowing the basics helps you avoid penalties, protect your savings, and transition smoothly into a Gold IRA. Get free Gold IRA guide and learn how to diversify your retirement with gold. Click the link below in the description to get it. Understanding a 457(b) plan. A 457(b) plan is a retirement account offered to government employees and some nonprofit workers. It comes with unique tax benefits. 1. Contributions are made with pre-tax dollars. 2. Money grows tax deferred. 3. Withdrawals are taxed as ordinary income. 4. Funds can be rolled into another retirement account, including a Gold IRA. These features make a 457(b) flexible for retirement transitions. Is a 457(b) to Gold IRA transfer taxable? The transfer itself is not automatically taxable. Taxes depend on the rollover method. Direct rollover, best option. This is the safest way to move funds. The money goes directly from your 457(b) to your Gold IRA custodian. No taxes withheld. No penalties. No income reported. Full balance transfers intact. Indirect rollover, risky. Here, the funds are sent to you first. 20% is withheld for taxes. You must redeposit funds within 60 days. Missing the deadline makes it taxable. Possible 10% early withdrawal penalty. Because of these risks, most experts recommend avoiding indirect rollovers. How taxes work after the transfer. Once inside a Gold IRA, standard IRA tax rules apply. Your gold grows tax deferred. No taxes on buying or selling metals inside the IRA. Withdrawals are taxed as ordinary income. Required minimum distributions, RMDs, begin at age 73. If metals are taken as physical gold, taxes are based on their market value at withdrawal, as defined by Internal Revenue Service rules. How to avoid taxes and penalties. To keep the transfer tax-free. 1. Use a qualified self-directed Gold IRA custodian. 2. Request a direct rollover. 3. Buy IRS-approved metals only. 4. Store metals in an approved depository. 5. Home storage can disqualify the IRA and trigger taxes. What happens to taxes during a 457(b) Gold IRA transfer comes down to proper execution. A direct rollover keeps your funds tax-deferred and penalty-free. With careful planning and compliance, a Gold IRA can add diversification and long-term stability to your retirement strategy, without creating unnecessary tax problems. Do you want to learn about how to secure your retirement with gold investment? Download your free Gold IRA guide now. Click the link below in the description to get it. Like and subscribe for more. Thanks for watching.